The African Guarantee Fund for Small and Medium-Sized Enterprises is set to receive a capital increase amounting to $26 million. The funds coming from the Nordic Development Fund, one of the organization's shareholders, and IFU will be officially announced during this year's board and annual general meetings. AGF continues to lead the guarantee market in Africa through provision of Africa guarantee products to financial institutions and has since inception unlocked $1.5 billion for financing small and medium-sized enterprises in Kenya and Africa at large.
The Kenyan government now refocus their strategy in the SMEs. This one is coming to tell the Kenyan government, look, we are here to support you.
We are looking to reach or to enable access to finance in the next 5 years, according to our 5-year strategy plan, to reach about 50,000 SMEs. And today, we have managed to enable or catalyze access to finance for SMEs across Africa, about 19,000 SMEs.
We have decided to become an investor in a cooperation with Danida, which is a brilliant example of what you could call blended finance, where the Danish state, through Danida, provides funding, and this money is challenged through a private sector investment organization, IFU, into supporting the growth of the private sector in Africa.
We saw a good opportunity to be associated in the development of providing finance for African SME sector, thereby also having a strong developmental impact, being involved in job creation for the African people, particularly African youth and women. And we've been very happy to note the good success of the AGF in that respect.
Well, to now drive the conversation forward, I'm joined by Joshua Ombengele, who is the head of risk at the Africa Guarantee Fund. And many thanks for joining us, Joshua.
Thank you, Abby.
And talking about funding in agriculture, we're seeing a lot of interest when it comes to supporting small and medium-sized enterprises in Africa. Perhaps talk to us about the criteria that AGF will be employing when it comes to selecting who gets the funds, how much does one get, and eventually what is likely to happen if someone does not pay up.
Yeah, thank you, Abby, once again. I think I may want to just briefly touch on where you started earlier, that yes, AGF is today signed agreements to increase its capital from and by about $26 million from IFU, who's joining us as a new partner, who's giving us about $15.5 million, and together with a grant, $2 million for our capacity development trust. Similarly, NDF, who is an existing shareholder, that's Nordic Development Fund, has increased its capital stake by another $10.5 million and an additional $1.5 million grant. Now, to your question, how do we determine, what criteria do we use to determine who gets funds or who doesn't get? Actually, our model is a partial guarantee model, a shared risk model with the financial institutions. So basically, our guarantee goes direct to the financial institutions who then on lend to the SMEs using our guarantee. Right. So the financial institutions basically will take the SME requests or applications for facilities or loans through their own internal processes or credit processes and assessments. And when they are satisfied that they make, they qualify to receive funds or to be given money from themselves, then they can come back to AGF if the only issue that is lacking is the collateral. If the only issue is collateral, but every other credit aspect is okay, then they can then tap into the AGF Guarantee Fund. That is how they get to know who gets the fund or not. Basically, is to enable access to those SMEs who lack the collateral who are prevented from getting finance because of lack of collateral.
All right.
Yeah.
And which sort of areas is AGF interested in when it comes to ensuring that the funds go towards specific sectors?
AGF doesn't doesn't choose specific sectors. Our guarantee is geared towards all sectors within an economy.
Yeah.
Yeah. So all sectors: manufacturing, trade, infrastructure, industry. It covers the whole across board, all the sectors, except the internationally excluded sectors. For example, sectors that promote child labor, sectors that promote gambling, sectors that promote trade in weaponry or warfare weapons. Those are some of the international excluded sectors, and we subscribe to that. So we wouldn't gain exposure to those sectors.
All right. Yeah. And looking at Kenya as a country, we are having SMEs spread across various sectors. And interestingly, we're seeing a lot of funding coming towards agriculture and technology. Perhaps if you could comment on this, and how will this impact on how SMEs are perceived upon them getting funding?
Yeah. Those two sectors are critical, especially from a Kenyan perspective, because you spoke of Kenya. Agriculture is the backbone of Kenya today. It's one of the largest contributors to the GDP of Kenya. Technology, ICT, is also has really picked up in Kenya, and it's one of the sectors that today is given a lot of focus because it supports the youth and it brings in creativity and innovation of the youth. It taps into that, and so it's one of the sectors that is of key focus in Kenya today. Basically because of it creates jobs and it supports the youth. And agriculture, basically because again we are seeing more women involved in agriculture. These are sectors that AGF are interested in, sectors that create jobs for youth and women, and which contribute significantly to the GDP, creating jobs, hence helping to reduce poverty, which is the objective of AGF.
All right.
Yeah.
And by getting this new partner on board as AGF, what does it mean for AGF in the long term? Are you foreseeing a bigger size of capital that you'll be able to lock in so as to ensure that your funding goes increasing year by year?
Yes, you rightly put it that this increase in capital actually supports AGF's 5-year strategy. And under the 5-year strategy of AGF, one of the key objectives is to mobilize resources to enable us achieve our mid to long-term goals of reducing poverty in Africa. Our plan in the next 5 years by 2021 is to mobilize around $420 million. And this increase is just part of what we are targeting, and it's going to be phased in the next 5 years. So this really is geared towards achieving the $420 million so as to reduce the funding gap to SME segment in Africa, which is today about $155 billion US. So AGF is targeting just to reduce it by 1% by the year 2021.
All right.
That is that will amount to about $1.5 billion US. So this capital increase is very important to us. It helps us achieve our key objectives within the African continent.
All right. And Joshua, as we wrap up the conversation, for that young entrepreneur who has been locked out of the banking system in terms of accessing financing, what is the future for them right now, as we're seeing a lot of entities like AGF coming in to sort of play that role to plug the deficit that is missing in the society? And if you could also comment on how do you also ensure sustainability of this?
A good thing is that what AGF has done is we have taken about 10% of whatever guarantees we give or our exposure, or even you can measure it against our capital. We have taken an internal decision to get 10% of that geared towards startups And startups are those areas that mostly you find the entrepreneurs are in, because they're just starting up, they have ideas, they have concepts, but they don't have capital, and they're still new, they're setting up new companies. And such entities, such entrepreneurs are usually shunned by banks or financial institutions and other lending institutions. Now, the reason we are supporting startup finance is to enable exactly that, to support that segment that has been shunned and has been left out for a long time. With that, then, once their businesses pick up and stabilize, with that we bring the support of our capacity development, which we hold them, we go hand by hand to try and build their skills in business management, to try and build their skills in putting proper structures within the entities they have, like governance issues. That helps them then scale up their business and grow into the formal sector of SMEs, and maybe later into that ensures sustainability. But a smaller component of that, again, is the renewable energy sector, which again we see today more and more entrepreneurs are going into.
Yes.
And with this, we have packaged a green guarantee facility. And the increase in capital for Nordic Development Fund is geared specifically to supporting the green guarantee facility, and hence help in climate change reduction, CO2 emission reductions.
All right. Yeah. Quite an interesting conversation. Many thanks, Rishu.
Thank you very much.
And the message I'm picking is the youth should look out for green projects that they can secure funding.